The sell signal's in place. That's going to keep pressure on prices here at least for a bit. Market rallies back to a bit of an oversold condition. Get another leg of this correction here before it's done. August tends to be not a great month, but it's not terrible, historically speaking. September tends to be worse. So we could be in this correctional process here for a month or two heading into the election. Okay, let's talk a little bit of what you need to know before the bell this morning. Last week, we had this correction, went down, tested the 50-day moving average. On Friday, had a very decent rally. Getting back above the 50-day. So again, we talked about this last week. Just a violation of the moving average on one day doesn't mean anything. A lot of people are like, oh, we broke the 50-day, got to sell. Be really careful with that, because generally markets do exactly what they do, is they get oversold during the sell-off, and we were certainly oversold here. So on Friday, we bounced. Got back above that 50-day moving average. The sell signal is still firmly in place here. So it is unlikely that the current correction is over yet. But I wouldn't be surprised to see this market try to rally for a day or so. Again, we are oversold enough now to get a bit of a bounce here, see some money rotate back into large cap techs, etc. Wouldn't be surprising to see that happen. But any rally that you get pushing up towards that 20-day moving average, which is now resistance, we took out that support, that running support line, turned it into resistance now on a test. So the market rallied back to the 20-day. I would take profits there, reduce exposure, do what you need to your portfolio to kind of clean things up. If you didn't like the sell-off, hurt you, right? It means you got too much risk in your portfolio. So use this rally to kind of clean things up. We've got this gap that opened up when we broke the 20-day, we gap lower. So we've got to also fill that gap to the upside to reverse this current sell-off process. I don't think we're going to do that on the first attempt. We may. It's possible we get, the Fed announces tomorrow, hey, we're going to cut rates for sure in September, whatever it is. This market gets all excited. We could certainly rally back above that 20-day moving average. If we do that, that's going to reverse the sell-off, and that'll pretty much mean the sell-off's over. We test previous highs, break out to new highs, the sell-off is over. But it's likely that we've got some more work to do here first. Again, the sell signal's in place. That's going to keep pressure on prices here at least for a bit. Market rallies back to a bit of an oversold condition. Get another leg of this correction here before it's done. August tends to be not a great month, but it's not terrible, historically speaking. September tends to be worse. So again, we could be in this correctional process here for a month or two heading into the election. Unlike we saw in April, which was about a 1-month correction, and then we took off running again. This could be more like we saw in last kind of September, October, where the market's just kind of ground lower for a couple of months. And again, as we kind of just really watch this kind of last September, October, we were just kind of grinding this portfolio, the market lower. We kept rallying back above moving averages. We thought we were kind of out of the woods, and then the market would kind of sell off a bit. We'd rally back, sell off some more. That could be, I'm not saying this is how this is going to play out. I'm just saying this is one of the potential possibilities that we could work through. We're currently kind of working through this initial part of the sell-off, but again, as we start to head into the election, markets are overvalued on a lot of fronts. We've got a lot of crowding into trades right now. Right now, it's the small cap Russell trade that's got huge options outstanding on IWM as an example. Those are typically great shorting points. So we could see another rotation within the markets. If earnings, we're starting to get fairly sharp negative earnings revisions on companies as they're missing estimates. Not surprising, I've warned you about millennial earnings season. And so we're now starting to see those downward revisions to 2025 earnings as well starting to come through. So that could put more pressure on the markets, get de-risking heading into the election. That's one option, right? So again, I'm not saying that that's going to happen for certain, but it's certainly worth just kind of keeping your back of mind. Just, be careful here. Use a rally at this point to sell into, don't try to buy the dip here. It's way too early. We're still on a big sell signal. Use the rally to reduce exposure, rebalance your portfolio, do what you need to do just to kind of minimize your risk levels, to where you're comfortable if this market does continue a correction over the next month or so. Now, once we reverse this and break out to new highs, obviously correction's over, and it's going to be kind of upside from there, but that may be a little bit of time before we get there. So that's what you need to know before the bell this morning.